And we have made it to the expenditure cycle. Moving on here, we are going to see that we have our similar format, similar layout. Before we had AR and sales, now we have AP and purchases. So again, similar layout. We have account balance and transactions like we did before, and then we get presentation and disclosure. Now let's dive right in, kind of similar to how we did before. With accounts payable, for completeness, we're going to search for unrecorded liabilities. That is our process. We've got different procedures, which we will see later on. Obviously, like I said, we'll talk about those. We saw those for AR. Now, for valuation, allocation, and accuracy, we want to foot accounts payable listing and agree to the general ledger. We want to essentially tie out, right, the listing of AP and agree to the ledger, review the accounts payable confirmation for results. Like I said, we're probably not going to use AP confirmations as much as AR and bank, but we can use them. For existence and occurrence, we're going to vouch the accounts payable to the voucher packages. Talk more about what that is in a bit. We are also going to confirm accounts payable. We can do that if need be. Lastly, for rights and obligations, here we're more worried about obligations. We're going to review these voucher packages for purchase orders, receiving reports, and vendor invoices. Just to give you just kind of like a brief overview, the voucher package is going to include all of these documents included in the AP transaction and in the purchases. But we'll talk about that much more in depth when we get to it. Moving on down here, purchases going to be on the income statement, whereas AP is balance sheet. For testing completeness on purchases, we're going to trace the vouchers to the purchase journal. We are going to account for pre-numbered sequencing of purchase orders. That's a great way to take into account the completeness. For cutoff, we're going to compare dates on the vouchers with dates of the transactions. And we are going to examine the purchases before and after year end. That is going to allow us to assess if they are in the correct period. For valuation, allocation, and accuracy, we're going to recompute the accuracy of any vendor invoices, making sure that we are being properly charged. For existence and occurrence, we can see testing vouchers and matching the receiving report for authorization, making sure that anything that is going to be processed was properly authorized and properly exists. And lastly, for understandability and classification, we're going to verify the classification, make sure that anything long-term purchase agreements, short-term purchase agreements, any expenses are properly classified. Lastly here, for both, when we're dealing with presentation and disclosure, we're just simply going to make sure that the required disclosures are included. We're going to read the footnotes. We're going to compare audit evidence to determine occurrence. And simply, right, we're just going to read the disclosures, make sure, using our professional judgment, that everything is properly disclosed and it is reasonably understandable and classified. Let's talk about the expenditure cycle. Now, this slide is pretty much similar to what we saw with the components of the revenue cycle. We talk about the general assumption, right? So this is the opposite. The general assumption of the expenditure cycle for the exam, as well as for many large companies in practice, particularly B2B selling to different companies, is that credit purchases, before we saw credit sales, these are the norm and cash is only paid instead of received by the company on the due date, usually in increments of 30 days. So it's 30, 60, 90, 120. We do not assume that the company is paying vendors cash at the date of purchase. That's just how we're looking here. The purchase cycle is going to consist primarily of purchases, AP, and cash disbursements. Obviously, like we said, with the revenue cycle, we're going to cover that cash portion later on, but obviously we touch on it a little bit here and there. A great way to test many of these assertions, like we said, is to think of the journal entries. So for example, if you want to test the completeness assertion over purchases, which we know, you can also trace. But here, an auditor can compare the credits to accounts payable with the debits to expenses, because if we incur an expense, we're going to debit expense for, let's say, $10,000. We're going to credit accounts payable for $10,000. So that should be very similar just to how AR is with sales. As credit purchases consist of a debit to expenses and a credit to accounts payable, these balances should be relatively close in amount over a certain period. Makes sense, kind of what we saw before, just on the flip side.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of cpa.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us, visit cpa.examprep.ai, and let's achieve your exam success together.